Good morning, ladies and gentlemen. Today we're going to be talking about the unstoppable market rallying nearly 0.35% on Monday and 0.85 on the NASDAQ on Monday as well. So breakout on both the indexes and a pretty massive pump as well. So if we take a look at the levels that we established in the weekend deep dive, link down in the description below. As you can see here, we are in breakout territory above the 460.75 mark, post-market 462.06 on the S&P. And the NASDAQ looking around the 392.62 area for the breakout. Clear skies ahead, 395.73. And remember, we are very close to all-time highs on both indexes. The Dow, which has already broken to new all-time highs, we are basically on the NASDAQ only 1.86%. Easily could be surpassed today on CPI day. So, well, as you heard, today is CPI day, so let's dive into that first just to talk about what are the threats, what are the things we're expecting. Is the market kind of a little exhausted up here? Because now if you look at the S&P real quick, this is a 12% rally from the lows back in November from the 408 area all the way to 461. That's a pretty nice chunky move that we have to start asking the question. We left this gap back here and we have not come back to fill it. We are pretty stretched away from our 50-day moving average. For all those that don't know what a 50-day moving average is, it's just basically a representation of the last average price over a set time period. If you hear 50-day, think of 50 days average. If you hear 200-day, 200 days average. But it's basically an indicator of bullishness or bearishness. Above it, bullish, bearish, below it. So we're above all the moving averages. We're above the 21, which I like to use as short-term price. And we're in the weekly breakout. So we got 1, 2, 3 things checked. Now, what do we need to continue this momentum? Well, we need the CPI report to come in our favor. So mainly thing I'm paying attention to is core. Core is going to be the one that I believe is going to move the market today. At the time of this video releasing, you guys will be 30 minutes from the report being published around 8:30. So make sure, link down in the description below, the investing calendar, so you can see for yourself what we have on deck, what the report's going to come in. And as always, we will be doing our CPI live stream along with the Fed live stream tomorrow. So make sure you guys subscribe, hit the bell notification so you can be notified of the stream. Come hang out with us. It's a really good time. We answer all your questions, love interacting with you. And thank you so much for watching the video so far. So do I really care about CPI? No, not really. The year-over-year number is kind of meaningless considered the volatility. Fed looks at core CPI. That's what I'm going to be looking at. That's what I'm going to be asking myself. If I see a 4.0 to a 4.0 number, am I considering that to be on track, as quote Powell would say, on track to 2%? That is what they are looking for. They don't care that the CME Fed tool is saying 98%, pause in this next meeting, and then nearly a ease of 43% in March and cuts in May of a 74% easing percentage. So again, this is basically telling me I really don't care what these people have to say. It's a good check on your own sanity and kind of seeing if people are getting over leveraged, but it really has kind of flown away from reality because of how liquid the movements are. Now, going into the expectation, 99.8% expect everyone to pause. Well, Powell kind of gave you that expectation from the last meeting when he threw out the dot plot, but we'll get past that for a second, and basically said that, I quote, they would need to see a reversion of the mean, aka inflation having consecutive basically 3 months of growth of a significant margin. So what would that look like? Well, simply put it, if we were at 3.2, you get like 3.3, then 3.5, then 3.8, an acceleration where the gap between the months is getting larger and larger and larger. And do we have any catalysts that can really do that? Well, if we took a look at oil, nope. That is below the 200, the 50 weekly, the hitting the 200 weekly. Dead cat bounce off of it, kind of just barely holding its head above that $70 mark and 43 cents. And looking more and more bearish. Predominant downtrend on the way down that you have not broken, looking probably to reverse course around here and head lower, breaking through the lows. And then, yeah, there's not a lot of support till you get to about the COVID levels or even around the $30 a barrel. So again, OPEC is going to try to kind of push that oil out, but this is really more of a sign of the broader economy, the degradation of the economy, which is further propagated by this article here. Low sales make this year's Black Friday the second worst ever. That was published November 27, 2023 from Valor Business. As you can see here, that it's basically an abysmal Black Friday sales. 14.4% lower than the previous year, according to the survey by Neo Trust. Sales were down 13% on Friday evening earlier compared to a year ago. And that's pretty shocking, guys, since considering 65% of sales on average are done on Black Friday for the holiday season. So if you had an abysmal sales now, why would you think people would have better sales and or money going into the year as those inventories have now been depleted? Those retailers don't have any incentive to give you a bigger discount, and it's just basically an abysmal sales of the year. And also, this is on nominal. So if you look at a nominal value, the sales adjusted for inflation, that's horrible. You're basically kaputting completely. And the article touches on general precipitation among retail consumers and CO thus Black Friday no longer has the growth potential it had until the 2016 recession. The following years, the lower economic growth helped to reinforce this scenario. So are we heading into the R word, which again, we have to see. And to date, the worst Black Friday performance was in 2022. Yeah, that makes sense because everyone was basically losing their minds because you couldn't afford anything. Everyone was losing everything, their house, their shirt, their skin. It was an abysmal time. Throw it down in the comments section below if you agree or disagree, and this article will be linked in the description below so you guys can check that out for yourself and get a better read on it. So we talked about CPI, we talked about a bunch of stuff. We really haven't talked about the elephant in the room, or actually I should say two elephants in the room. And I'm not trying to be bearish, guys. I'm just telling you what are the risks, what are the rewards. Like if I'm looking at this chart, taking completely everything that I just said out the window and just looking at price action, and if this price action continues, I'm betting bullish. I'm not going to be playing the bearish game here because we are a weekly breakout, continuation of a third weekly breakout, and I'm probably going to be playing that, especially if we get a nice volume push on CPI going to Powell, and Powell doesn't absolutely screw us up. Well, that's where we get into the interesting of things. So quickly recapping, 68 greed overnight repo kind of ticking up here to 838 billion, but usually it flatlines after the drop. So this is as expected. CME expecting 98%. Now I mentioned Powell for one reason, and that is because on Wednesday we have the Fed interest rate projection statements. You have the SEP, which for those that don't know what the SEP, it's basically the dot plot, which is a summation of where they think rates are going. Now, there's a couple things we have to piece apart for the big man. And well, one of the questions is, will he blink on rate cuts? So let's piece that just quickly for the next 30 seconds. Powell has basically come out at December 1st, basically saying that they're not thinking about hiking, where he gave that earlier quote that I quoted to you today about having a reversion of the mean, and then cutting as well, that we're not talking about it. We had the San Francisco Fed, I believe Susan Collins, or something of her name like that. I apologize, I don't remember her name exactly. But the San Francisco Fed came out and basically said that rate cuts are not even on the table. Waller came out and said, hey, we're possibly thinking about rate cuts, but I'm going to look at what the Fed minutes say. The Fed minutes say that they have not talked about cuts. So therefore, why would the reversion of the mean all of a sudden come when, honestly, if you look at this CPI report, this is not necessarily progress. That's where things are getting a little bit tricky once you get down into the 4s and the 3s to get it back to that 2%. That would put us all the way into June, July, where cuts are in reality. So we could see a reversion of that mean. We could push cuts out further, and we could be playing this game for quite some time that we get stagnation in the market. Hey, we're going to cut in X, Y, and Z months. Then Powell comes out and says, no, market goes down. Then they come up with a new theory. Market goes up. Then Powell comes out, market goes down. And we do this endless cyclical nature until the yield curve basically breaks our back. Oh yeah, and that's my favorite indicator of all time, the yield curve, where I basically talked about on this channel for quite some time. We're finally going sideways, guys, and if you guys follow the channel, you will know exactly why I'm so excited about that. That means that maybe for quite some time, we will go sideways into the end of the year, which is demarked by the orange line, which basically means my running theory of the double tops and stuff like that. So around that time, I'm expecting maybe something to possibly break. And as you guys know, there's a lot of threats in the treasury market. The video by Heresy Financial does an excellent op-ed on this. He just posted this last night, so I will link it down in the description below for you guys to check it out. Give him a like, give him a sub. He's a really good channel. I follow him, and he does some amazing analysis. He'll give you a much more in-depth of the treasury market, more than I could you hear. So make sure you guys check out his video. It is absolutely excellent. Could not praise him more. So with that, guys, I will conclude today's video. Thank you so much for watching. And as always, this will be linked down in the description below, along with the weekend deep dive and the investing calendar, so you can make sure you can track the CPI results as they come out live. And I hope that you guys come for the YouTube live stream, because it's going to be a jam-packed one for CPI. We're going to be talking about what the report did, what it means for Powell, and everything in between. So make sure you guys like, comment, and subscribe. It really helps the channel out. And thank you so much for watching. Hope you have a wonderful Tuesday.